Welcome back to Explain the Charts, everyone. Today, September 14th, 2025, we're dissecting ETHUSD, which has been making headlines with remarkable institutional activity and ambitious price predictions. Recent news indicates a significant supply crunch is looming for Ethereum, largely fueled by massive acquisitions from institutional players. Notably, BitMine Immersion has reportedly scooped up a staggering 319,000 ETH in just 1 week, worth over $1 billion, with forecasts suggesting they could accumulate an additional 4.1 million ETH by the end of 2025. This aggressive buying, combined with robust staking activity where nearly 30% of total ETH supply is locked, is creating a severe liquidity squeeze. Analysts are now targeting ETH prices anywhere from $6,000 to $12,000 in the coming months, with some predicting a potential sprint to $15,000 by December 2025 if institutional FOMO continues to accelerate. Even wallets tied to the Coinbase hack have been observed making substantial ETH purchases, further underscoring the deep pockets entering the market. Spot Ether exchange-traded funds are also experiencing significant inflows, reflecting a powerful resurgence in institutional demand and shaping market sentiment. The narrative around Ethereum's role as a yield engine alongside Bitcoin as digital gold is gaining traction, signaling its long-term strategic importance. Let's jump into the charts to see how these macroeconomic and institutional movements are translating into price action. We'll start with the daily chart to get a broad overview of Ethereum's journey over the past year. Looking at the daily chart, we can observe a clear long-term bullish trend for ETHUSD, despite some significant corrections along the way. From its lows around $1,400 to $1,500 in April 2025, price has generally trended upward. Notice the sharp recovery after the August 2024 dip, where ETH plummeted to nearly $1,911, but quickly rebounded. This shows strong buying interest at lower price levels, suggesting solid support around the $2,000 to $2,200 region. The current resistance at the recent high around $4,800 is a key level to watch, which we touched in August 2025. Prior to this, we saw another major surge in May 2025, with a significant green candle pushing price from roughly $1,800 to over $2,200 in a single day, followed by a continued ascent. This rapid climb from mid-May confirms the explosive potential linked to positive news, likely correlating with early institutional interest and ETF speculation. The area around $3,500 to $3,800, which acted as strong resistance earlier in December 2024, was decisively broken and now serves as a new support zone. After the strong rally into August 2025, Ethereum pulled back from its high of $4,836.20 on August 22nd. The current price action shows consolidation around the $4,300 to $4,500 range, a critical juncture that will dictate short-term direction. Let's zoom in on the period of the May 2025 surge to appreciate the magnitude of the bullish momentum. Here, from May 8th to May 10th, 2025, ETHUSD exploded from around $1,811 to over $2,583, a gain of more than 42% in just 3 days. This massive movement was characterized by exceptionally high trading volumes, indicating strong conviction from buyers, likely linked to the institutional accumulation reported in the news. Such sharp increases often indicate fear of missing out, or FOMO, which Paul Barron mentioned would accelerate prices towards $15,000. The subsequent consolidation above these levels, despite minor pullbacks, demonstrates the strength of the underlying trend. The candle on May 8th, showing an open of $1,811.43 and a high of $2,231.20, is a prime example of this explosive growth, confirming the rapid capital inflow. Now, shifting to the current scenario on the daily chart, we are seeing Ethereum trading around $4,669. This is slightly below the mid-$4,000 $0.000 range mentioned in some news articles and confirms a recent consolidation phase. A key resistance level immediately overhead is the $4,700 to $4,800 zone, which ETH struggled to break decisively in mid-August. Below current prices, the $4,200 to $4,300 area is a critical short-term support level, as indicated by previous price action and news reports of ETH holding firmly above $4,200. Breaching this $4,200 support could signal a deeper correction, potentially towards the $3,800 zone, which acted as resistance, then flipped to support earlier this year. On the upside, a clear break and sustained close above $4,800 would likely set the stage for an assault on the psychological $5,000 level and then the technical target of $5,260 from the symmetrical triangle pattern identified by FX Empire. The decreasing volume during this consolidation phase also bears watching. A breakout, either up or down, will need a surge in volume for confirmation. Let's move to the 1-hour chart to get a more granular view of the recent price action and identify immediate trading opportunities. Here, we can see the short-term volatility within the broader daily trend. Since early September, ETHUSD has been oscillating, forming a series of lower highs and higher lows, suggesting a tightening range. The price is currently hovering around $4,669, reflecting the recent pullback from the August highs. Immediate resistance on this time frame is around $4,680, which has been tested multiple times in the last 24 hours. On the downside, short-term support is visible around $4,650, where buyers stepped in during yesterday's dip. A decisive break above $4,680 could quickly push ETH towards the $4,700 to $4,720 resistance area seen earlier today, potentially leading to a retest of $4,770. Conversely, a break below $4,650 might see price test the $4,620 to $4,600 region, which has offered temporary relief in the past few days. Now let's drill down to the 15-minute chart to analyze the very immediate price levels and potential entry/exit points for day traders. Over the past few hours, ETHUSD has shown some range-bound movement, consolidating tightly between approximately $4,650 and $4,670. The current price around $4,669 suggests a slight bullish bias within this tight range, as it's near the upper end. A short-term resistance level is clearly established at $4,675, with several candles failing to close above it in the past hour. Immediate support lies at $4,655, which held firm after the early afternoon dip. The relative calm on this time frame, indicated by lower transaction volumes compared to earlier volatile periods, suggests a period of accumulation or indecision. For bullish traders, a confirmed breakout above $4,675 on strong volume could be a signal to go long, with targets towards $4,700. Bearish traders might look for a break below $4,655, targeting a move towards $4,640 or even $4,620. Always remember to watch for volume confirmation. Low-volume breakouts are often fakeouts. In recap, Ethereum is currently in a fascinating position, driven by significant institutional momentum and looming supply shocks. Key support levels to monitor are $4,200 to $4,300 on the daily chart and $4,650 on the hourly. Crucial resistance levels are $4,700 to $4,800, with an eye on the $5,000 psychological barrier and the $5,260 technical target. A sustained break above $4,800 on strong volume makes a run to $5,000 highly likely, perhaps 70 to 80% probability, especially if institutional buying continues. The probability of reaching $6,000 to $12,000 in the coming months is also strong, perhaps 60 to 70%, provided global economic sentiment remains positive and ETF inflows persist. The ambitious $15,000 target by December 2025 hinges heavily on accelerated institutional FOMO, making it a 40 to 50% likelihood, but one with huge upside. Conversely, a breakdown below $4,200 could signal a deeper correction towards $3,800 or even $3,500, a 30 to 40% probability if macroeconomic headwinds strengthen or institutional interest wanes. Look for increased staking activity and consistent ETF inflows as reinforcing conditions for bullish scenarios. Also, keep an eye on broader market sentiment and any new regulatory announcements, as these can significantly impact crypto prices. For traders, volume accompanying any breakout or breakdown from current consolidation ranges is paramount for confirming the validity of the move. Always manage your risk, set stop losses, and consider your time horizon when trading ETHUSD. Thank you for watching Explain the Charts, and we'll see you in the next video.